If you thought the global financial crisis was tough, brace yourself. More than $50 billion has been wiped off the local share market in today's trade. That comes on the back of Wall Street's biggest sell-off in nearly 3 years and steep falls across Europe. Investors fled the markets in droves as fears about a global recession gained momentum. Some economists say Australia won't be able to escape it this time around. Taking a look at the damage here, the All Ordinaries plunged more than 4%. It's now dropped 17% since mid-April. The benchmark ASX 200 shed 4%, while the Australian dollar's now fallen to 104 US cents. With a closer look at today's massive losses, here's Bridget Glanville.
As investors fled, the sea of red told the story. Australia followed the fear and panic that hit the world's financial markets.
Yeah, this is probably the worst down day in probably 2 years post-GFC, without a doubt. And it's a big day in terms of volume as well, over $9 billion worth of turnover.
The United States and European markets led the massive sell-off. Debt concerns saw the main US indicator lose all the gains it made this year.
Investors are selling ahead of the July jobs report, which many people believe will be a lot weaker than what the consensus is expecting right now at about 90,000 jobs.
Europe has its own debt worries. Germany's DAX and London's FTSE had their worst day this year, closing almost 3.5% lower. It comes as the European Commission President gave a warning that last month's rescue package isn't enough to stop Europe from heading into a recession.
We are facing two problems in the Eurozone. First of all, policy is not able to leading. It is confusing financial markets. That's the main problem. And the other problem is we have still no perspective for Spain, for Greece, for Portugal, for Ireland.
Australia can't escape Europe's pain.
We know that the financial sector links are much more important through Europe and the US, and that impacts upon confidence and it impacts upon wealth.
The Reserve Bank has slashed its growth forecast for this year, and there's growing pressure on the bank to drop interest rates.
They cannot conceive of putting up interest rates while the international situation, the global debt problems are so great.
In 2008, China's demand for the country's resources helped Australia escape the worst of the global financial crisis. But economists say things are very different this time around. China's two largest customers are the US and Europe. If those economies collapse, then the Chinese demand for Australian resources will dramatically fall. And this time around, there's no money left to bail out struggling economies. The Treasurer says Australia's feeling an impact, but is well placed to ride out the volatility.
All of these factors mean that our economic credentials and fundamentals are strong.
But it's clear that confidence is no longer strong. Bridget Glanville, ABC News.